I use one simple trading strategy every single day, and it makes me over $100,000 every single month. So in today's video, I'm going to show you exactly how it works. And I mean exactly. I'm going to reveal my entire trading process, how I find the perfect setups, how I determine my entries and exits, and most importantly, how I protect my trades so that I can have a 70+% win rate. So by the end of this video, you should be able to apply all of the same principles that make me over $100,000 every single month. Now look, I'm not saying you'll be able to copy my results in a month, but if you want to watch me trade live and learn my process in and out, please click the link below to see if you qualify. Anyway, the harsh reality is that 93% of people overcomplicate trading. The truth is, trading isn't about fancy indicators, nor is it about complicated strategies. Trading really boils down to a few key principles, and that is what I'm going to show you right now. I've been trading for just under 3 years, and in that time, I've been able to go from zero to over 6 figures per month in profit. And I promise you, I'm not special. Now, the one thing that has made me special or stand out is that I've been able to do one key thing. I've been able to manage my emotions. And the way I've been able to do that is by implementing an emotionless risk management system that prevents my losses from being greater than my wins. The perfect example that I have is actually from the trading session this morning, August 7th. Let me show you what happened. Now, when the trading session kicked off, I immediately went to the purest approach strategy, step 1, which is finding our levels. Now, the way I found levels from this morning's session was number 1, to look at pre-market price action. And you can see in this yellow area that we had a number of reactions, 1, 2, 3 times, right around 635.67. The other thing I saw was a number of touches, 1, 2, 3, 4, 5, 6, 7 times. Now that wasn't pre-market low or pre-market high, but I did observe touches that created an upper bound level of potential resistance and a lower bound level of potential support. The next step was to see if the open market or New York market would confirm either one of those levels. Let's see what happened next. Once the market opened, I did observe reactions to both sides of that range. You can see that 1, 2, 3 times price tested and failed to close above that level of 636.79. At the same time, I also saw tests and reactions to the lower bound level that we had determined at 635.67. And so as price continued to develop, I did feel very confident that we had found both our upper bound level of resistance and lower bound level of support. At that point, step 2 of the purest approach strategy is wait for a firm 5-minute candle close below support or above resistance. So what happened? Right at the 10:05 candle, we had a very firm 5-minute candle close below support. In fact, it was so firm that it actually closed below what I had predicted to be our underlying level of support at 634.98. And where I got that level was right at where pre-market opened. Once we had a firm close below both support and underlying support, I felt very confident to take entries on puts. What I did observe is that we continued to have a lot of room to move down to reach aftermarket close. And so we took entry on that firm 5-minute candle close, and then we implemented the risk management system. Now let me tell you what happened at that point. We had a really nice reaction to that level of pre-market open, which we predicted would be support, but now as resistance. And then we had an incredibly fast push down. In fact, it was so quick that I was able to remove my stop and sell half my position at over 10%. In fact, I sold the half our position at 14.5%. At that point, step 2 in the risk management system is to put our stop loss to break even. Well, what happened at that point? At that point, price did retrace fairly quickly and did stop us at break even. Now, at that point, price continued to flush and went all the way down to previous day high, which I have marked PDH, which I marked at the wick at the top price action of yesterday, a very common area for price to react to. Now, here's where the emotionless risk management system came into play. We were able to sell half our position at 14.5%, and then we did get stopped at break even. This was still a very good green trade of just over 7%. Here's where most traders go wrong. Most traders would say, man, if I had just brought my stop loss back below break even, or if I just kept it off a little longer, I could have capitalized on this massive move down, and I would have turned that trade into a 25% trade. It's a very common emotional reaction to have. And I had that little bit of greed creep in myself. However, let me show you how important it is to stick with this emotionless risk management system. It was very early in the session, and I knew we had a ton of time to look for a second setup. And what did I see? Well, once price came down and tested previous day high and failed to close below it 1, 2, 3, 4 times, I had thought that we had hit the low of the day, at least for the morning session. And what was I looking at? I was actually looking for price to reverse, to come back and move very quickly back up through this entire distribution down. I saw a reversal coming into play that would have been just as profitable as that put entry that we took. And so I was assessing a reversal. What did I see? We failed to close below previous day high. We had a retracement candle, and we found some resistance right here at 633.82. And so I marked that as a potential level of resistance. And so once we had a reaction, we had a retracement. Previous day high again applied a significant amount of buying pressure that pushed it back up and caused it to test that new level of developing resistance at 633.82. I had looked and I had seen an incredible amount of room back up to get a 20+% win on some calls. And so when we had a firm 5-minute candle close above that level, we took entry on calls. Now price did dip back down. We had our automatic stop loss at 10%. And when it retraced, we stayed well within our 10%. It came back up and it closed above our resistance. The thesis that that level, which was resistance, became support was confirmed. And in fact, price continued to push back up. Right at the top of this wick, we were able to sell half our position. And following the risk management system, we put our stop loss back at break even. Now, I had just gone through a trade in which putting my stop at break even had stopped me out and then price flushed. I had this very natural emotional reaction. If I just don't put that stop back in, maybe it won't stop us out at break even, and maybe price will shoot back up to the moon, all the way back up and take a high, and we'll get all of that money back. However, I avoided that emotional response, that greedy response, and I put our stop to break even. And in fact, it did stop us out at break even. Another green trade. In fact, between those two trades, we made almost 10% on the day, and we're still not done. Here is exactly where I believe most traders let the emotions get the best of them. If we had allowed that prior trade to affect our emotions in the second trade and had said, we're not going to put that stop in at break even. In fact, we're not going to put that stop on at all because it has to go back up and it has to come back into pre-market range. What would have happened if I had done that? Well, we had taken calls here. We had gotten half our position off up here, and then we stopped at break even down here. If I had allowed my emotions to take over and had left that stop loss off, price flushed all the way down, and in fact continues to flush down, we would have lost our entire trade setup. That would have been a 100% loss on my positions. That would have been 10 profitable trades down the drain. And it would have taken me probably at least 2 to 3 weeks to claw back and again to overcome the emotions that would have affected me in this trade. And so by sticking to the system, yes, maybe that first trade, which could have been about 20 to 25%, was stopped and kept us at about 7.5. However, following that emotionless risk management system allowed that second trade to be able to be stopped at a 5% gain instead of a 100% loss. So I truly believe that to be successful long-term in trading is that, one, you must have a consistent strategy where you find your entries and exits. And two, you must combine it with an emotionless risk management system that prevents your losses from being greater than your wins. If you're able to successfully combine your strategy and this emotionless risk management system and stick to it every single day, you will be profitable long term. I have been trading just under 3 years, and I've been fortunate enough to have long-term success. What I can tell you in my 3 years of trading is that the number one thing that is going to come back and be a challenge month after month after month is managing your emotions. Learning how to read price, learning how to find your key levels, learning how to find your entries and exits will get easier and easier over time. However, managing your emotions, greed, fear, only increases the more successful you get. The more money that ends up in your account only escalates the emotions that will overcome you when you are trading. The one way that I've learned to continuously to manage my emotions is to have an emotionless risk management system in place that I follow every single day. So the one key takeaway that I'm going to give you in this video is figure out that system that works for you and put it to work so that you do not have to worry about managing your emotions, because they will come back and they will come back and they will come back every single trade, every single day, every single week, every single month. Anyway, if you got a lot of value out of this video, please subscribe to my channel. New content coming every single week. And leave a comment with what you liked in this video, what you liked in other videos, and what you'd like to see me moving forward. See you in the next video.